Okay, everybody, if you can take our seats. Our guest of honor is here. Thank you. I'm very pleased to see that Inga Beale, who is the CEO of Lloyd's of London, has accepted our invitation to come and make a keynote address, especially relating to Lloyd's receptiveness to Takaful. And Inga has set her own timetable for this session. Normally, obviously, this session would be at the opening of the conference. But this was the only time she was free during this conference two-day summit. And so we are still very grateful for her to accepting this slot. As I was telling Inga, the two of us share one thing in common at least, apart from being in insurance. Both of us have spent about a decade each at the Prudential. So what you are seeing are ex-Prudential people putting forward their views. So with that, may I call Inga, please, to deliver her address.
Well, thank you. Thank you very much. And it's an honor to be speaking to you all here today. And I'm really glad that we could actually fit this around my schedule and obviously your schedule for the day. And I know that I'm just between you and what will, of course, be an amazing awards dinner. Is that right? So I don't know how many awards there are going to be, whether it's as glamorous as something like the Oscars, but I won't be able to stay with you. But I'm very pleased to be here, at least for a little while, and to share some views, particularly about Lloyd's. And, gosh, yes, days at the Prudential. Now, that is going back in time. For me, that was in the 80s when I first started in the industry, in the insurance industry. And a lot has changed in that time, indeed. But congratulations for this. Isn't this your 10th anniversary of having this summit? So congratulations, and that in itself is a testament to hard work and passion. So without further ado, I know you've heard a little bit about insurance today, and particularly the need for the London market, or a little bit about the London market, which I believe is still the undisputed global centre for specialist insurance and reinsurance. But I think it's great that we can actually talk here today, or I can talk a little bit about how we might engage and do business with and for the Takaful and re-Takaful markets. So I am going to talk a little bit about Lloyd's and perhaps the similarities between Lloyd's and some of the things that you require to be Sharia compliant. Now, I'm not going to take away any of the expertise and history of Lloyd's, which I'm sure some of you are familiar with. It's a very, very, very unique place. And for those of you who haven't yet had the chance to visit Lloyd's, that infamous or famous inside-out building based in Lime Street, which actually is 30 years old today, which is saying this year, sorry, because it's to actually look at it, and when you go in it, to think that 30 years ago that building was opened up to much horror in the city, because of course it was an extraordinary eyesore to some people, not fitting in with some of the traditions of London and really breaking lots of rules, I'm sure. But it's still there 30 years later, and it's thriving, and it really is as busy as it ever has been. And now Lloyd started 328 years ago, so we're very, very proud of a long history. And as London's importance as a sort of trade centre grew, the demand for ship and cargo insurance, so all the merchants wanting to protect their prized possessions, that increased. So Lloyd's managed to grow as sort of London as a trade centre grew. And Edward Lloyd's coffee house really became recognised as the place to go to for marine insurance. And it is very much the genesis of the Lloyds we know today. And it was sort of the start, if you like, of any sort of mutual gathering, crowdfunding, some people might think of it today, where the sailors, the merchants, the ship owners, they met to gather to get the latest shipping intelligence, to find out what was going on at sea, and then to start sharing amongst themselves the financial risks that they were facing. So they were effectively guaranteeing each other. And this was way back in those early beginnings in 1688. And since then, Lloyd's has continued to be very much a pioneer in insurance, and it's grown to become the only physical market in the world that specializes in insurance and reinsurance. Now, Lloyd's has often been the very, very first to write new risks. So Lloyd's syndicates, when the vessel went on land, and they did describe the automobile when it went on land as a vessel with wheels because they didn't have any other terminology for it, Lloyd's was the first to insure the motor car. Lloyd's was the first to insure the plane as it took off for the first time, the first to insure satellites as they took off. Lloyd's pioneered earthquake insurance, business interruption insurance, D&O insurance. So anything that was new, Lloyd's was there providing insurance for. And of course, more recently, we're still leading the way in doing some pioneering new forms of insurance, such as cyber risk and supply chain disruption. So the interesting thing about Lloyd's is that it's actually made up of some of the world's largest insurance companies. So some of the largest players are there, and they have syndicates there. And they have syndicates there to complement what they do elsewhere in the world. And part of it is to get to this specialist, this niche business that is so attracted to Lloyd's. And it's really because of that underwriting expertise being at the heart of everything that Lloyd's does. Now, sometimes these syndicates do compete. They're sitting next to each other in the same room. Sometimes they are actually actively competing, but sometimes they are collaborating. And that idea of sharing the risk, sharing the financial risk that was born in that coffee house still exists today, where risks are syndicated across some or many of the syndicates there. So we've got this sort of capital mutuality and this sort of cooperative risk sharing that is really, really totally unique. And I think that's why it forms, I think, can form a very nice partnership with what you might want to be doing in the Takaful space. Lloyd's has a truly global reach. We do business in over 200 countries and territories around the world. And however big and however small each individual syndicate is, they have access to the same trading rights. So centrally, I run the corporation, like the corporate centre of Lloyd's, and one of our duties is to provide those trading rights, and they apply for every single syndicate, however large or small they are. And despite some very challenging economic conditions, and the world is certainly facing some challenging conditions out there, and the insurers are not escaping, but Lloyd's remains very, very financially strong. We've got Standard & Poor rating us as A+, Fitch at AA-, and AM Best reaffirms the Lloyd's market with an A status with a positive outlook. And again, every single syndicate, however small or large, benefits from that financial strength rating. So a very, very unique place to do business. And I think one of the reasons, and Lloyd's is very, very popular at the moment. For those of you who are familiar, we have an underwriting room, this big atrium in there. We have 4 different levels where underwriters are seated, and they literally do sit there like a market stall. We've got queues of people, lines of people who want to come in. We don't have enough space for them. So I know that Lloyd's is doing very well, and I really honestly believe it's because of the strength and depth of the underwriting. Now, I might say that because I did grow up as an underwriter, but I really believe that's very, very much at the heart of Lloyd's and is certainly the winning formula. And it's why it's been renowned for such innovation, because the individuals have very, very trusted relationships with brokers. The underwriters have very trusted relationships with brokers. They talk about the complex risks. They talk about the changing risk landscape. And together, they're able to come up with new products and new solutions. Now, I do believe the Lloyd's model is well suited to the operation of Takaful and re-Takaful syndicates. I think you heard perhaps from one of them today. But why? Why do I think that? Well, structurally, the similarities between the two models are really, I think, quite striking. Our unique market structure makes Sharia compliance possible. For instance, we can accommodate fund segregation, and just for those of you, again, who are not that familiar with Lloyd's, anyone who underwrites in Lloyd's, has a syndicate in Lloyd's, has to allocate funds separate from all the rest of their business. They have to allocate funds and segregate it in Lloyd's, and so it cannot be used for policyholders outside of Lloyd's. But even within the premium trust funds that have to be deposited, they can then enable fund segregation in there. So we're already very, very used to having segregated funds. But it's not only the structure of the Lloyd's market that's conducive to London becoming a global centre for Sharia-compliant insurance. There are some inherent advantages of, and I would say this, wouldn't I, the centre being here in the UK. We've got a time zone that sits very much at the centre of global capital markets. English is the international business language, and there's a deep well of existing expertise in Islamic finance in the professional services industries to draw from, including more than 25 law firms. And of course, we have world-class educational institutions offering training courses and qualifications that are second to none, including 10 new Chevening scholarships for Islamic finance. So I think this cluster effect that London has of bringing together so much expertise makes it a very, very attractive centre. Now, there are some obstacles to overcome. I'm not saying the Lloyd's market is fully Sharia compliant as it stands today, and there could also be various interpretations, perhaps some of them I'm sure you've explored today, of what Sharia compliant principles in different countries mean. But we want to be mindful of that. As I said, Lloyd's is always looking to innovate and to be at the forefront of things. It's in our DNA. It's in the heart of what we do. So we're very mindful of being able to work and accommodate business and Islamic insurance as it moves forward. And the rapidly changing world means that all of us really have to be aware of what's going on in the wider world. There are many, many challenges out there at the moment, and the global insurance industry is facing a lot of those because, of course, insurance underpins and de-risks a lot of what goes on in the world. We're there to de-risk investment in all sorts of infrastructure. We're there to de-risk and support and build resilience into societies, into communities, into countries and economies. And, of course, no one is immune to some of these challenges. Now, last month, I was fortunate enough to go to the World Economic Forum in Davos, and we were meeting and discussing the issues and challenges we all face across the entire globe. But also, I focused on a few specific sessions on financial services. But during that time I was there, I don't know if you remember that, it was sort of third week of January. During that very time when you had all those global leaders meeting in that snowy Davos, we saw global markets suffer hefty losses on the back of oil prices falling to a 12-year low. And the economic slowdown in China was bruising confidence and, putting jitters out across the entire global economy. So it was very, very interesting time, and it felt as though there was a lot of turmoil in the world. And aside from what was happening in the financial markets, the big topics of conversation at Davos were about climate change, fintech and what's happening with the fintech revolution. They were talking about virtual currencies, and they were also talking about robots, artificial intelligence, and how some of our jobs may be done by some computer-aided robot in the future. So, and particularly actually if you're an underwriter, the underwriter's job appears in the list of top 10 most likely jobs to be done by a robot in the near future. So I think all of this illustrates that the world is changing like never before. And it is affecting all of us wherever we are. And we can't escape it. And what's also interesting is not just how much is changing, but the pace of change. It's happening faster than we've ever seen it happen before. McKinsey stated that it's happening 10 times quicker. This digital revolution is happening 10 times quicker than any industrial revolution has changed things in the past. So climate change, that's another big topic for us. It continues to threaten the future of the entire world unless we take bold and enduring measures to mitigate it. Now, we participated in the COP21 in Paris, and I think that was a good start, but there's a long, long way still to go on that side. And the digital revolution and the pace that new technologies are being created is this changing the way we live, the way we all want to work, and the way we engage with each other all around the world. And all of these things are changing the risk landscape, and particularly with technology, it's connecting people across the world like we've never seen. And that's why for us the cyber issue is such a hot topic at the moment, because we really don't know even how to assess what one cyber incident somewhere in the world, the impact it could have elsewhere in the world. And these things we have to consider as we think about our business models, how we're set up, how we've traditionally been doing things. So I think also when we look out at the future and we look at what's out there, we know we've got insurance market conditions that are very, very challenging. But also when we look at the whole global growth outlook, it remains somewhat subdued. And with 2015 sitting with an estimated 3.1% of growth, this year it's projected to rise a little bit to 3.4% and 3.6% next year. But undoubtedly, there's been a widespread slowdown across some of the emerging economies where we thought we might see great business opportunities in the future. But they are still growing, and it's not all doom and gloom, and I'm very aware that we don't want to talk ourselves down and down into a sort of self-fulfilling spiral. So we have to be mindful of that. But we do have to face fact, and we do have to think about what's happening out there in the world and how little growth there might be, particularly in some of the advanced economies. Now, in terms of insurance, we anticipate seeing a continuation of low interest rates. And of course, that does have an impact not only on the returns that insurers can see, but what it's doing is it's forcing investors to look elsewhere, to look at where they can invest their money. They're looking for higher returns elsewhere. And therefore, a lot of that capital has come to the insurance market. And that in itself is then putting further pressure on the market and increasing competition, and resulted in sustained downward pressure on pricing. So what we've got happening, we've got pressure on top-line growth. So we've got insurers buying rivals. So we've got a very active M&A market at the moment, and we don't think that's going to change. People are looking to get non-organic growth out of these. They want to have a more diversified book of business. And often they're acquiring assets in Lloyd's because of the access to that specialist expertise that we're so proud of in Lloyd's. And there's been some significant M&A activity right in the Lloyd's market. We've had the XL Catlin transaction complete. We've seen a listed insurer, Brit, disappear as Fairfax purchased Brit last year. We've had ACE acquiring Chubb, and both of those organisations had syndicates in Lloyd's. And they're creating the world's largest publicly traded P&C insurer. And then we've also had some Japanese firms buying up Lloyd's businesses. We've had the MSIG group complete its acquisition of Amlin earlier this month. So lots of us in Lloyd's, to think about, and to think about how we need to perhaps change the Lloyd's market to adapt to what's happening. And there's another a second trend that I think is very important for us to consider, and that's about urbanisation. Cities are now the engines of national economic growth. So we already know that 50% of GDP, global GDP, is within 300 individual cities in the world. And the concentration is going to only increase. So by 2025, it's anticipated that 70% of global GDP will be coming from those 300 cities. So we've got ever more concentrated high-value assets, and everything, as I said, is much more interconnected than ever before. Now, while this urbanisation might make economies very efficient, they're also very vulnerable to catastrophic and systemic shocks. And we've actually done a report, we do a lot of emerging risks work, and we've done a report specifically on the risks of this urbanisation trend. Now, the thing I've also talked about, the digital revolution, this is the third big thing that's taxing me at the moment, because technology is truly disrupting our traditional business models. If we think about Uber, the largest taxi firm which doesn't own a taxi, and we think about Airbnb, the largest hotel chain that doesn't own a hotel room, it's really interesting to try and sort of get your head around these different business models. And when I think of things that Uber is sort of facing with, and we think about self-driving cars that everyone is investing in now, there will be a time probably when Uber will suddenly be old hat, because we'll then actually just have self-driving cars. So what does Uber do next? And what I'm saying is the pace of this change, of these real disruptions coming in and continuing to change for the future, are very, very important. And they have huge implications for all businesses, but also potentially huge implications for Lloyd. So we want to make sure we're trying to keep on top of these risks, and that we are coming up with solutions for business, because our role is very much to, as I said, de-risk businesses, enable them to invest for the future. We've got to keep changing and keeping abreast of what these risks are. And of course, the thing is, the risks these days are much more man-made than they ever were before. So we used to worry about those traditional natural catastrophes. Now it's man-made. The biggest threat to GDP globally is a market crash. We've got oil price shock up there. We've got cyber attack. All of these come up way before a flood, a hurricane, all those risks, those exposures that we so used to worry about. So physical assets now, they're all, they're less important to protect almost than some of these digital assets, these intangible risks that make it very, very difficult for us to actually measure and get our arms around. But we do have a vision. We've got a vision for Lloyd's, Vision 2025, which was launched a few years ago. We had David Cameron coming to Lloyd's to officially launch it. And a key strand of that, or key strands of that, is to look at innovation, And it's also to look at the expansion of Lloyd's presence in developing and growth markets around the world. And we're making great progress. And we are looking at adapting the Lloyd's model. And I know that many years ago Bermuda set up, very much becoming a sort of bit of a threat to London, then not too far after that we have Singapore. I think there was discussion on Dubai earlier, and of course Lloyd's opened up in Dubai last year. But it's really important, if we want Lloyd's to stick around and be around for another 300 years, that we make it very accessible for people. We make it easy to do business with Lloyd's. So we've got modernisation projects going on, and we've got expanding our global reach as another key initiative. So we see also expansion into the Takaful and re-Takaful markets as an important part of Lloyd's growth, and that's why we're here. And we've all come together in the spirit of collaboration, I think, and that again is one of the key secrets of how Lloyd's has been successful, is that collaborative approach. And we know that the Takaful industry is growing. In 2014, boosted by the estimated $2 trillion of global Islamic finance markets, the global Takaful market was projected to grow by about 14%, and there's not many markets that can claim that sort of growth. So it's an impressive number, and if it keeps growing at that pace, it could be worth more than $20 billion by 2017. And according to commanding half of the global contributions, Malaysia, along with the UAE and Indonesia, will continue to set the pace for the development of Takaful products, both in the Middle East and in Asian markets. However, a key theme across Takaful markets is the significant level of under-insurance. So insurance penetration rates in key Takaful markets average just 2%, against a global average of over 6%. So there are real differences, and underinsurance is a worrying trend, I would have said, that we've seen, actually not just in some of these emerging growing markets, but also in some of the traditional markets. And it's been a big focus for Lloyd's. We've issued several reports on the underinsurance, on the protection gap. And again, we're really keen to make sure we're able to help build resilience in where people are not yet buying insurance and not protecting themselves. So I think there's enormous potential for Lloyd's to support development across the Takaful markets, helping both businesses and, of course, the local insurance industry adapt to the changing risk landscape. And Lloyd's model is very much based on working with local insurance industries. And we have a huge delegated authority model that we've been working with for years, which proves very successful because it means people can be close to their customers and they can really, really understand the risks. And of course, when this insurance penetration remains low, the burden falls on governments and businesses to fill the gap. And of course, we all know that when governments step in, really who's paying? It's all the taxpayers at the end of the day. So this becomes very unsustainable as the costs of catastrophe losses increase. And we know, by looking at the data, and we know the impact of climate change, that the cost of natural catastrophes, weather-related catastrophes, they're 5 times as extreme now as they were in the 80s. So we know that there are all sorts of worrying trends out there showing that we need to do more work in terms of developing insurance or providing the ability for businesses and people to protect themselves. So Lloyd's, we're looking to develop and grow Sharia-compliant insurance products to help address that insurance penetration gap. So we've got cobalt underwriting again. I met some of you outside just before I came in. I think it's one particular example in the Lloyd's market. It's used that popular delegated underwriting authority model that I just mentioned. And we're very, very hopeful that more companies will follow their lead and develop equally innovative solutions. I know earlier this month there was a new political violence facility backed by Chaucer, by Cobalt, and that offers Islamic buyers and markets a product that enables them to manage their growing political risks in a Sharia-compliant way. So at Lloyd, we're doing our best to basically encourage, really actively encourage innovation in all its forms. Now, just turning to our Dubai office, in April this year, we'll be hosting our very first Meet the Market for the Middle East region in Dubai. We hold these events all over the world, and they're an opportunity for Lloyd's to show a little bit about how the market works in London, shows the special nature of the room. We sort of recreate a Lloyd's underwriting room, and basically we facilitate relationships and networking. And so we do this, as I said, in various countries around the world, and we're taking this out to Dubai for the first time this year. And I think, hopefully, I don't know how many people will be attending, but the more people go, the more networking that takes place. And it usually leads to actual business happening. It's not just an empty networking session. It proves to be very successful around the world. Now, we do need to continue to work with brokers and underwriters. Lloyd's, again, is a fully brokered market, so we rely very much on the brokers. And we know that we need to keep moving forward, we need to be flexible, and we need to continue to be innovative. So I am not saying that we're there yet, but we have certainly got the passion and the interest within Lloyd's and the centre to support business and growth as much as we can. And that means we keep the dialogue up, we keep collaborating, and we keep working together, because it's that sparking of ideas together that will ensure that we keep innovative and deliver what you're so looking for in this rapidly changing world. So with that, I will thank you very much for listening. I'm very happy to take some questions now, if you're not all too exhausted from your hard day sitting in here. Thank you.
Thank you very much. I think maybe we have time for a couple of questions. If anybody has a burning question, please. Yes, can you have the mic here, please?
Hi, Inga. It's Ian speaking. I'm running a technology company, and I was wondering if you could just give me a bit more background on the cyber security, because you said it's a hot topic. Or it's basically, you have it in the paper almost every day. It's the hot topic this year. And the interesting thing, I spoke to Martin of Norton Rose this morning. Is one of the surveys say that no cyber insurance has been bought within the respondents of the survey within the Takaful market. So that was very interesting for me to hear. And I was just wondering if that's part of the lack of awareness, or is there a missing link in cyber insurance as such? So I was just wondering if you could give me your views on that.
Yeah. So the estimates, and I don't know whether this was touched on earlier, the estimated economic impact for the global economy from cyber attacks is $450 billion a year. And I'm sure this year that'll be going up and up. And there are probably only two types of firms in the world, two types of businesses, those that have been hacked and those that will be hacked. So it's probably a dead cert that every firm is going to suffer at some time. Now, the global insurance premiums for cyber in 2014 reached $2.5 billion, and that means people buying specific cyber insurance, because some coverage already might have some sub-limits, it might include some sort of cyber coverage. But standalone cyber totaled $2.5 billion in 2014. However, 90% of that was bought by US firms. Now you might say, is that because they're being hacked more? Well, I think what's actually happened is that the government insisted that every single breach of your security, your systems, had to be reported. And that meant it got put on the agenda of all the boards of the businesses in the US because they suddenly had to start reporting all these breaches. And that raised the awareness up to people who were then getting very, very concerned about it, because we have a little bit of a cultural issue going on in that if I were to go to the IT, my head of IT, and ask him how protected he thought Lloyd's was for cyber attacks, he would probably want to assure me that he's doing an absolutely fantastic job, and that, of course, the risk of being attacked is very, very low. And that, of course, is what will happen, because people want to show that they're doing a very, very good job, and they're very unlikely to admit, perhaps, the full extent of exposure. So by the US government demanding that all breaches be reported, said they raised the level of awareness and people started buying insurance. So a lot of what we do, particularly when we go into new risks, is about raising awareness and just helping people understand how they can protect themselves. Now, some of the surveys we've done, and this isn't just for cyber, but this is for the new risks that are out there, 90% of the risks that businesses face these days, insurance is not able to provide a solution for. So we can probably do a better job, which is why I'm very keen for us to keep pushing forward as a whole industry on R&D, research and development, and being able to provide relevant insurance. But some of it, I will admit, is about helping people understand, raise awareness of the issue, and understand how an insurance solution could actually support them, how it will react. Because a lot of what we do is not just provide an insurance policy in case there's been some sort of financial loss, but it's also access to crisis management support, how can you limit your brand reputation, all of those other services. And that often comes together with buying some sort of cyber insurance. But it's a very unpenetrated market outside of the US at the moment.
Thank you. One last question from Dr. Hassan. Can we have the mic here, please?
Good evening. My name is Hassan. I'm from Malaysia. I work for Takaful, Malaysia. We are one of the few Takaful companies in the world that does oil and gas and energy treaties for the major power producers in Malaysia. Unfortunately, over the past few years, it was quite difficult for us to find Takaful capacity and expertise. So I've been dealing quite a bit with the Lloyd syndicates through our reinsurance broker, which is Willis. Over time, do you foresee there is enough volume, enough businesses coming from the Takaful industry to justify having a fully Sharia-compliant Lloyd syndicate?
Yeah, I mean, when we look at some of the forecasts for the future, I believe there will be enough volume. But some of these things do take time, but I strongly believe, and particularly for Lloyd's, we are very long-term focused. So we don't, fortunately, and there are some listed firms that have syndicates, but for us as a market, we're not having to worry about quarterly earnings calls and all of that sort of thing. We're very, very much in it for the long term. And when we think about some of the investments we've done, when you first do them, there might have been criticism from some of the market saying, why on earth are you doing that? It can take sometimes 15, 20 years for them to go and say, that was the right thing. So we spend a lot of time trying to be very, very strategic and long-term in our thinking. And as I said, we're having been around for 328 years, I hope we can demonstrate that. And I fully believe that this is one of those opportunities that may not happen like that, and sometimes it might grow and then it might shrink a bit as people try and get their heads around it. But I do believe in the longer term, which is what I'm very much focused on, the strategy for Lloyd's as a long-term basis, there is a future for it, yeah.
Okay. I think Inga's also time is short, so we can stop there. Thank you very much.
Okay, thank you very much. Thanks.
Inga, thank you very much for that very insightful address. And I hope we got the message that the door for Takaful in Lloyd's is open, but it's not a subsidized operation. And as she said, it is a long-term thinking, so also it's not for short-term gains. So I think we have our work cut out to see how to effectively engage with the different entities in the Lloyd's structure.